Thank you very much. SME financing in difficult times. Well, I've been in this venture capital business for 22 years, actually, a long time. One of the things that I can say, and I've seen it happen again and again, is that it's fundamentally cyclical. So basically, you can, whatever the situation is now, it won't necessarily be the same in 2 years' time. Now, the only sad part about that is sometimes those cycles can be quite short, and they can also come at you thick and fast, and often in the wrong way. But in the course of my career, I've been absolutely fascinated and impressed by the quality of entrepreneurs that I've met, and I don't see any difference today. In fact, I see more today than in the past. And what I would like to talk about is the fact that entrepreneurship and innovation does not actually die just because the financial markets are in terrible shape. In fact, it thrives. And it thrives because we are all forced to think more creatively about how we accomplish things. And it's really important that you know that some of the most successful companies have been started, built and founded in the depths of recessions. We've done a lot of analysis that basically says there is no correlation between when a company is started and its success. None whatsoever. It's random. They can be started in good times, they can be started in bad times. There is a huge correlation in the multiple you achieve, and if you start in bad times, you actually end up being much more frugal, much more capital efficient, and your actual outturn is usually much better. And what really matters, and this is something that I want to leave you with, is that you sell in good times. Because that is what makes the huge difference to your returns. So what's happening in venture capital? And I'm only going to talk about venture capital because that's what I know most about, but I have brought with me a fairly, actually now quite long list of government initiatives to help SMEs to leave you with, so that you think about opportunities for finance well beyond venture capital. Because actually, my encouragement to you is to think way outside of that narrow sliver. Venture capital funds a very narrow piece of the SME population, which are these ultra-high growth companies that are now called YOLIs. But I actually don't know. What YOLI stands for, so I just know they're called YOLIs. They used to be called gazelles in America, but they're sometimes called YOLIs. But this is across Europe. It's something like 3,000 transactions in a year. That's a very small number of transactions, and it's very similar in the US. By the way, it's only about 3,000. But you actually hear about them because they grow very fast and they become substantial success stories. And it is not appropriate for the vast majority of SMEs. However, for those YOLIs, even the venture capital climate is getting more tough than it has been, well, for a decade. So to give you some sense of what's going on is, in the boom times, and venture capital is highly correlated with booms of the internet, the US raised about $85 billion in venture capital, and Europe raised about $25 billion. To give you a sense of what's happened in the industry, this year the US will raise 16, so it will have dropped by 80%. And that's the US phenomenon. And we always think of the US as being the home. By the way, it's not the US, it's like 5 towns in the US. It's not the US. In Europe, at the moment, we're on track to raise 2. It's dropped by 90%. Okay. In Israel, I was just there, they had 85 venture firms in 2000. They have 15 now. Where is the money going, if there is any? Well, it's going to pay off debt. But apart from that, a lot of it's going to the emerging markets, and it's not going to venture, it's going to growth. And so China now has a bigger venture capital market than Europe. It's not venture capital, it's a growth market. Why is that happening? It's happening for a number of reasons. And it's really worrying in terms of the prospects for these high growth companies in our economy. It's really worrying because there are some businesses that do require capital and to be successful. There are lots that don't, and those that don't, I would really encourage you to stay that way. Why is it happening? No, seriously.
No, I absolutely agree. I wish people would learn the value of equity.
Yeah. So why is it happening? Well, first of all, as an industry, the European industry, and frankly the US and Israeli industry, the developed world, has really been caught by now 3 major financial crises. One of their own making, which was the bubble, which is 2001. The second, not of their making, which was 2008, mortgage debt. And the third, not of their making, called the Eurozone crisis. And the Eurozone, and that is basically awash in the financial system. What has happened in the middle of those crises is that an understandable political reaction has been to regulate the hell out of financial services across the board. Banks, pension funds, insurance companies, you name it. Scandals of various sorts have emerged in sort of placing agent scandals in the US, where people are being paid to place money in funds. The consequence, to give you again the scale of this problem, this is a sub-problem, I've given you the absolute numbers, is that in 2007, in Europe, the industry raised $3.5 billion. Right? Sorry, it was about 10 billion, of which 35% came from regulated financial services, which are pension funds, insurance companies, and banks, 35%. First half of this year, so that's 35% of a 10 billion number. First half of this year, pension funds, insurance companies, and banks contributed 5%, so 35%, of a $1 billion financing, $55 million into fundraising.